Hi, welcome to Green World Investor, a one-stop shop for personal finance needs for beginners. Today's topic for discussion is how, why, and where can you invest in gold ETFs in India? Yes, we will talk about how we can invest in gold ETFs in India. In earlier videos, I have already shared about why we should invest in gold in 2023 and the different ways through which we can invest in gold. Now, buying a gold ETF is one of the preferred ways of investing in gold. So, for the earlier videos, you can refer to the link in the description box for this video. And if interested, please go check it out. I have covered all the points and details in there. So, talking about gold ETFs in India, gold ETF is one of the better ways to invest in gold in our country. Though I prefer sovereign gold bonds are a better option. However, gold ETFs have their own advantages when compared to the sovereign gold bonds. So what are they? So gold ETFs, unlike sovereign gold bonds, are easily traded on the Indian stock exchanges. Gold exchange traded funds track the prices of gold, physical gold in India. Also, it is easy to buy and sell them through exchanges, and some of the larger gold ETFs are highly liquid. So why and how is it different from SGB? Because in a sovereign gold bond, the tranche opens only for certain periods. It is not like if चलो आज मैंने decide किया gold bond खरीदते हैं तो जाकर खरीद लिया. No, that is not the case. It comes over different periods. For example, the current sovereign gold bond tranche is open for series 4 gold bonds, and if you're interested you can go book it online because you will get a discount of rupees 50 per gram if you do so. And also, if you want, hurry because today is the last day. It had opened from 6th of March to 10th of March 2023. So go check it out, because I feel sovereign gold bond is also a good way to invest in gold, because you get a government guarantee, there is a lock-in period, and the prices are very transparent. However, they are not easily tradable as in the case of an ETF, because like stocks, you can easily buy and sell them through stock exchanges in India. So it's very easy, through a click here and there you can invest in a gold ETFs. Now, gold ETFs trading started in India around 12 years back, and Nippon Gold Bees were one of the first ones to launch a gold ETF. However, now many of the fund houses, in I think 13 fund houses have launched their gold ETF. Some of the prominent names, if I can tell you, is like Axis, UTI, we have ICICI Prudential, HDFC, then Government Bank, we have SBI. So there are many gold mutual fund houses who have now come up with their own gold ETFs. So we will take up later how we can choose between the different fund houses and go for the right gold ETF to invest in. But given that they launched these back in 12 years back, so they have a longer history of comparison. So you can track their performance over the years, which is not the case in case of the bonds, gold bonds. So those were few of the differences between an SGB and a gold traded ETF. Of course, trading is easier in case of a gold ETF when compared to an SGB. However, still many people, if we argue about physical gold, many people still prefer the old way of holding jewelry, gold jewelry, bullion, or coins, biscuits. But again, having a gold ETF or a sovereign gold bond is always a better option than physical gold, because there is no transaction security or holding cost required in those. So these are better options when compared to physical gold in my view. But of course, gold has a tremendous store of value, and it protects us from erratic market conditions as well as a rupee devaluation. But holding some form of physical gold is also good, because in case of extreme calamity, for example, if you see the war condition in Ukraine currently, so in such cases having gold is very good if you have some physical gold, but for an overall portfolio diversification, because gold is a very good asset diversifier, I would suggest that you go for e-gold in the forms of sovereign gold bond or gold ETFs. Now, if we talk about global gold ETFs, they are pretty large fund houses. For example, we have the SPDR Gold Trust, which GLD, which holds around 4.5 lakh crores in assets. So it is one of the largest gold ETFs globally, and it is trades in the US exchange. So now let's take a look at how can you choose between the different gold ETFs, what you should prefer, how you should go about it. So we already spoke about the 13 gold ETFs, 13 mutual fund houses in India who have issued their own gold ETFs after Nippon. So Nippon is the oldest and largest fund house when it comes to gold in India, and also it holds more than 7,000 crores in assets under management with an expense ratio of 0.8%. Now, I agree that the expense ratio is on a higher side in case of Nippon. Now, compare this to SBI. So, SBI holds around more than 2,000 crores in assets and has an expense ratio of 0.64%. So, there is not much to differentiate between the different fund houses of how you should go about it, but you should take a look at the quality of the fund house. The expense ratio is very important, and also you should see the fund size. What is the size of the fund house? So on these grounds you can decide which one of the better is a better one. Also, in my view, I would suggest SBI is a good choice because I prefer government owned funds, and they have a secure backing with them, and also their expense ratio is lower when compared to the private funds. Now here, please note, I am not a SEBI registered financial advisor, and this video and advice is for educational purposes only. Please do your due diligence and consult your personal finance advisor for the any investment actions that you take. So now let's talk about the different advantages of a gold ETF. So gold ETFs are secure. Why? Because gold ETFs are backed by physical gold held by a custodian and are generally secure. Though people still talk about holding physical gold in their own portfolio, but going the modern in the e-age, I will advise you to have a large portion of gold if you are interested to have them in an electric form. So they are secure. Number two is that overall the gold ETFs globally hold a total of 3,500 tons of gold as per the World Gold Council. And number three, gold ETFs in India have a good history of performance and have given a good returns of around 12% in the last 5 years. So you see that the advantages and the features of gold ETFs, how you should invest in a gold ETF. You can look at the different fund houses, compare the expense ratio, look at the quality of the fund house and the size of the fund, and you can see their performance because they have been in India now over a decade. So you can also see how they have performed over the years. Also, they have a physical backing and a custodian involved, so they are secure in nature, and you can easily buy and sell them like normal stocks through exchanges. So even that convenience is provided. So it is better when compared to physical gold, because in physical gold you have a headache of transaction costs, transportation costs, security costs, making charges, such stuff, but which is not the case in case of gold ETFs. And when you compare it to a sovereign gold bond, because sovereign gold bond, you cannot just decide to go and buy a sovereign gold bond because they are issued by the government in specified period. Again, I would want to point out here that investors who are interested in sovereign gold bond, do it today, because today is the last day. You can book it online through any of the banks. So that facility is not available in case of a sovereign gold bond, because sovereign gold bond is only available for specified periods Whereas gold ETFs you can buy any day, anytime. Large ETFs have good liquidity involved, so that was one of the advantages when we compared it to a sovereign gold bond. And given the inflation situation, which is so sticky currently, I would suggest holding some form of gold is good in your portfolio. It will act as a good asset diversifier and also give you some form of security, which is not there in case of erratic equity movement, and also the rupee again, appreciation and depreciation. So that was all from my side. Please do check out my other gold videos and make an informed decision on your portfolio. So I hope you like my video. Please click on the like and subscribe button. I hope to see you soon. Bye. Have a nice day. Thank you for watching.